Hey everyone, RC Peck here. So I saw this marketing email this week and it said 25% of all the US dollars in existence were printed since February of 2020. Let's just call that about 17 months ago. And the email goes on and talks about how the world's going to end and it's going to affect stocks and bonds and commodities and real estate in your future. But don't worry, if you just buy my newsletter, you'll be protected. Now, here's the thing. We have to understand how this deficit spending, how this debt spending, how this money printing, how this stimulus check printing, how these things are actually impacting people's investments. So that's what we're going to do in this video, talk about exactly what is happening, where to look when the cracks start to happen before the break happens. So stick around and we're going to get to that. All right, everyone. So this is what we're going to cover. And there's three things we're covering in this video. The first is we're going to talk about money printing and the stimulus checks and the debt spending and all that stuff that you get hit with, all that fear mongering you get hit with each day. And we're going to talk about it in the frame or the sense of looking at price charts. So I'm going to jump over to the price charts in a moment. Second, we're going to talk about where to look and how to know whether it matters or not. And third, I think is most important, is what questions should you be asking? Because most people are taught to just be scared. Most people are taught to just make statements. But what we're actually going to do is look at what questions you ought to be asking and where to find those answers. So let's do this. Let's pop over to the price charts and let's jump into this. So look, this is a price chart of the S&P 500. It's 3.5 years in range. Not much to say about this. It's going up and to the right. Now look, this little black squiggly line only goes up when more people want to be in it than not be in it. This is price. Price is the only thing that pays. It's one of the things I teach in my training. You got to understand how to read price charts. That's not the only asset on the planet. It's in fact not even the biggest asset. Here is bonds. Now this is US bonds here. And part of what I want to be answering for you is how do we understand if money printing is going to affect us? So let me just first pause and say, it's already affected. It's past tense. People are looking for it to happen, like it's gonna happen, like something's gonna happen. It's already happened. Like it's already happened. And sometimes I say billion when I mean trillion, or million when I say billion. And I think that's because our human brain doesn't really get trillions, billions, millions. They're all kind of this ethereal number that doesn't mean much. On the screen here, you have the US bond market. Let's call that sideways. It's been going sideways for a little over a year. Sideways is not up. Sideways is not down. That's a price of the US bond market. So that means more people are not moving into the bond market. Now, this is really important because if shit's going to get real, that price is, that black line you see on the screen is going to start going up. At least that's how it's been designed. You can see back here in the COVID crash, it actually fell really quickly, got right back on its feet. But that's the overall bond market. This is the international bond market right here. And you can see it kind of looks the same. Let's call it sideways. So the bond markets, both international and domestic, they get all the money printing. There's tens, hundreds of trillions of dollars collectively in here. And they're like, it's fine. There's no cracks in the system. This has already happened. A lot of it is because governments are buying these up. And you can say, that's what I'm worried about. I think you should worry about something different, like what you can actually control. You can't control the Bank of Japan buying bonds, or the Bank of China buying bonds, or the Fed. Let's call it the Bank of US, even that's really not what its name is. They're doing that. They've been doing that for decades. It's not going to stop. What's more important is price. And price for bonds is not moving higher. That means the world is not concerned. One thing we can do is take the US bond market, the US stock market, and we can price it in bond units. So look at the price chart and just think of yourself, this is the US stock market priced in US bond units. And if the black line is going higher, everything is fine. So I talked about the beginning of this video. How can we tell if there are cracks? Well, this line would have to be falling or going sideways. You can see back here in 2018 and 2019, it was kind of doing its sideways thing. It tried to break below right there, tried to break above there, and finally it broke above and broke below. And maybe it's easier if I just do this, just so you don't have to try to envision what my brain is seeing. So look at the screen here. Stocks versus bonds is basically, if the black line is above the yellow, all is fine. If the black line is in the yellow, all is fine. If the black line is below the yellow, not good. So there was some back and forth going on in 2018, 2019, and it just started breaking out in 2019, right? The stock market was going to do well, and then COVID came, scared the hell out of everyone, and then the stock market got back on its feet and moved higher. So we're seeing no cracks here. There are no cracks in the system. Money printing is already affecting the world. The markets of the world are going up. Used cars are going up. I wrote some of these stats down. Year over year inflation is 5.25%. Core inflation is 4% year over year. It doesn't, in some ways, it doesn't matter. It matters what your own inflation rate is. That's what really matters. The effect of money printing is already happening. These are the effects of it, right? The US government's been giving the wealthy kind of bailouts for decades. That's what happens when the Fed says, hey, we'll buy up all corporate bonds of the 1,000 largest companies. Great, that helps all the people who own the 1,000 largest companies, which is the top 10% of the country. Now, finally, stimulus checks are going to, quote unquote, the bottom 90% of the country, and they're spending it. They're spending it on things. So this is what's going on. If you make $50,000 a year and live in Memphis, Tennessee, you have a very different inflation rate than if you make $500,000 and live in Silicon Valley. It's a different inflation rate depending on where you live. And it's a different inflation rate whether you own a house or you don't own a house, right? Because if you own a house, you're just excited because your house is going up 30, 40% over the last 2 years. If you don't, you're feeling very stressed and strained and like you can't get into the country club being home ownership. So nothing is showing up right now for cracks or breaks in the, oh my gosh, money printing. Now, I think, and this was my third point in the video, I think knowing what questions to ask, right? So in regards to money printing, the question, a strong question would be, where will the negative effects of money printing show up? Or how will I know if it's going to hurt the stock market? Without sounding like a jerk, the stock market would actually have to be falling for it to be affected. It would have to be falling relative to the bond market. Neither of those things are happening. Now, what I can tell you, and we can talk about what is happening, is the commodity market is moving higher. So this is DBC, which is a tracking symbol of, let's just go back 7 years, 7.5 years. The commodity market is the highest it's been since, wait for it, 2014. Let's just call it a 6-year high for easy math. So the commodity market is at 6-year highs, 6-year highs. That's a big deal because if you look at the commodity market, let's just look at, here's the commodity market, the actual index. If you look at this, let's just go back, 30 years. That's good enough. We haven't had this type of increase right there that many times, right? We had it here between 2001 to 2008, and it went up, let's see, 150%. This was a total clean out below that blue line. That cleaned people out. And I think this clean out right here is very likely the very same thing, but in reverse as that. So where's it affecting? It's affecting commodity prices around the globe. How do you protect yourself from that? Own the commodity complex. Own a symbol that tracks the commodity complex that is moving higher, right? You can be angry about it, or you can just find a symbol that makes you have enough, more than enough, makes you richer, makes you have more choices. You can complain and kvetch about it, or you could buy a symbol that makes you more stable, right? Asking the right questions matters. Hey, how can I protect myself from all this money printing? The answer is find the assets that are appreciating higher. And that's what's going on now. What you don't want to do, and let me get out of this really long wide. What you don't want to do is own silver. Silver, if you look on the screen here, just broke down out of a 1-year channel, right? So basically the rule is if you're over 50, you think precious metals is the place to do. Have you ever heard the portfolio insurance? Well, that's not going to help you. It's actually hurting your life. Similar things, these are just tracking symbols for silver and gold. This is tracking symbol for gold. Actually, let me bring gold up because kind of if gold's below 1800, it's not protecting you. At a minimum, gold needs to be above $1,800 to be a potential form of protecting you. I've got nothing against gold and silver, but it doesn't care what's going on with money printing. It helped out a little bit right after the COVID crash, but it quickly reversed itself. So what I most want you to get from this weekly video is a couple things. One, making a statement like, I'm so worried about money printing. That doesn't help anyone. What you do is you change it into a question. If money printing were to begin to hurt me, where would that show up? Where do I see the negative effects of money printing in my portfolio? Where will they show up? The good thing is when you know how to read a price chart and you understand signals and strength, only 3 things, you literally can go, oh, I'm fine. Or you can go, oh, there's a signal. Strength is weakening. It's time to step out. And so understanding how to read a price chart, understanding how to know what signal to look for and how to measure strength is really going to help you grow that portfolio. So we have silver breaking down. We have gold breaking down. Okay, so clearly they're not going to help us with the money printing. We got the stock market going up. We got the stock market going up relative to bonds. We've got the bond market, both U.S. domestic and international, going sideways. I have to catch your breath here. And we've got the commodity market at 6-year highs. So you want to go with what is working. And what is working is finding the prices that are moving higher and participating in them. And that's what's going on. As far as, because I did not talk about real estate, let me quickly talk about real estate here. This is at least U.S. real estate. Let me just zoom way out. Here's U.S. real estate. I want to zoom out even more. Let's see if we can break the system here. How far back we can go? Only 2000. So this is the Case-Shiller National Home Price Index. It's unadjusted for inflation, but there in 2018, we broke out to new lifetime highs. And this is money printing. This is what happens when the government sends stimulus checks out, when the government shuts down things. By the way, this is not a hit piece on government. But this is what happens. People go and say, you know what, I'm moving to Memphis. I used to live in California. I'm going to live in Memphis, Tennessee. I used to live in Silicon Valley. I'm going to move to Idaho. This is what happens when you can take your income with you and you can move to Wyoming. People move to Wyoming and real estate goes higher. So I love what's going on in the sense that we're going to have fewer office buildings in the world. We're going to have fewer people on planes doing business trips because they can use Zoom. That's going to absolutely help the world, right? It's going to grow the economy. But you gotta be in the things that are growing. Last week, I think I talked about how Europe was going to be left behind. You're going to have a communist state, you're going to have a capitalist state, and you're going to have a crypto state. And Europe better jump onto one of those. And by being in a capitalist state, they're going to have to really come on board with technology, internet, Web 3.0, and they're not. That's why the U.S. keeps kicking ass against Europe and even China. But that's what we're going into. We're going to kind of 3 poles of the world: a crypto world, a crypto corner, a capitalist corner supported by the US dollar, and a communist corner supported by the Chinese yuan. All right, guys, thank you for being in my world. Leave any comments. Where did I get it right? Where did I get it wrong? What do you want to see more of? Hit the like button. So what's funny about this is I go to other videos that I like, and I'm not kidding. Even when I like a video, I'm like, should I click the like button? I mean, should I? Literally, I'm like, it's free. It was great content. And I hesitate, someone who has a YouTube channel, to just hit the little thumbs up or even to leave a comment. I would love for you to do both. Comments matter, they help elevate the video to other people who have not seen this channel or heard my voice before. And same thing with the likes. So those things happen. So please do that. And guys, if you do like this, you will love my other videos and you'll love my free course, Clarity and Control. Check it out. It's in the description. All right, guys. Oh, and if you want to know why this looks like I got hit, I had some cancer taken off my face. Then I had to have some reconstructive surgery done on my face. And this is the result of it. This is, let's see, about 10 days post-surgery. So doing pretty good. Okay, guys, thank you for being in my world. Spread the word, hit the like button, leave a comment. And if you know anyone in your world that is really worried about money printing, have them watch this. Because if they are, what they really need to learn about is where the effects of it will show up in their portfolio. That's what's most important. That's the right question to be asking. All right, guys, thanks. I'll talk to you soon.